View for March 7th, 2025. Coming into the day, I thought we would trade below the prior day's low. Since the prior day was a bear bar on the daily chart, I thought we might have to see what was below it. We opened with a really strong bull bar. The bull bar is going to need a second leg. So as we're pulling back on two, traders were interested in buying because you know that bar one is going to get some sort of second leg because it's such a large, strong bar. So some traders were willing to buy as two was pulling back and expecting that we would get some sort of second leg up. Bar three, 3, 4, 5, three good bull bars, but it's before bar seven. And as Al has said many times, if you're going to trade before bar seven, you have to be careful, especially with buy the close trades, because a lot of times they can reverse. Really, what it comes down to with buy the close and sell the close trades is learning that most of them you can scale into and make money. If you're taking reversal trades, it's harder to scale into, in my opinion. But if you're just taking simple buy the close trades, you can scale in, you can scale in, you can scale in, you can scale in. Even if you bought this close with a wide stop, you could scale all the way in and you would have been able to make money at the end of the day. So it's an important thing to learn. 6 is a big enough bar that it's going to need a second leg. I bought the 2 high during 7. I thought 3, 4, 5 might get a second leg. It's not a great trade, I think, at this time in the day, simply because I should be taking that trade after bar 7, but I got a bit eager and I bought the 2 high. And my mistake was when we got a reversal up on 7, 7's not a good buy because 6 is going to need a second leg. Therefore, we should go one tick below bar 7. So you get 6, 7. We should go below this low since 6 is so big. And 7 is a poor stop entry buy. It's a big bar with big risk, and the probability isn't all that great that we go anywhere. So I probably should have just scalped out at the bar 5 low when I got it during 7. I ended up basically holding and getting back to break even on the trade. So not very good management on my part there. I thought the entry was fine, but I need to probably scalp out there. 8 and 9 consecutive bear bars. Again, we should go one tick below the bar 7 low, and then 10, another bear bar. So 3 straight bear bars. It is a second leg down, 1, pull back 2, but we should get one more leg down. And as I mentioned, I thought we were going below yesterday's low, so I thought it was okay to be short. I sold above 10, and then I exited at the low of the day. I did think we were going here. I could have held, but there wasn't much left there, and I thought it was a possible leg 3, so I just got out basically around this low. So I sold above here and I exited here. I did sell a little bit on the close of 14. My logic for it was we had just opened this gap, and this could be a leg 1 instead of a leg 3. You have to be careful with leg 3s because a lot of times leg 3 turns in, or leg 3s, things that you think are leg 1s are leg 3s. I wasn't convinced it was a leg 1, but I wanted to sell a small piece in case you went straight down. And I did sell the close of 14, and I sold a little bit more above 15. And then as 16 was rallying, I just exited. So I took a loss on that trade. I sold here, I sold more here, and I got out over here. I did not get out up here. I was pretty quick to get out, but I got out somewhere in this area. I thought, 12, 13, and 14 should get a second leg, but 15 and 16 I thought was definitely going to get a second leg simply because it was 3 legs down, right? 6, 9, and then 13 or 14. So it definitely was 3 legs down. But I also thought that even though it was 3 legs down, this is a tight channel from 6 to 14. This should get a second leg. However, 15 and 16 is a really, really big and strong leg 1. So I thought that even if we fell below this low, we should get some sort of second leg. I thought we would initially get a smaller second leg and probably test this close and then pull back and then get a larger second leg. To be completely honest, I got a little screwed up mentally in here because I was staring at 15 and 16, assuming it was going to get a second leg. So I was really unwilling to sell for this whole thing. I did the thing and just kind of crossed my arms and just was willing to sit out if it went a lot lower. But obviously, as you can see, we sold off down to this area, got a reversal up, closed the gap with the 15 low, second leg down. You could argue this whole thing was a second leg down. Leg 1, leg 2, basically in the area of that. And then consecutive bull bars, 35, 36. Okay to buy the close of 35 or 36. I think 16 high is a target. And, if we're closing gaps on this trading range day, maybe the bar 5 close, so those bulls might be able to get out. However, I thought for sure that we would get to the bar 16 high because the bulls who bought all the way up to that high tick know that it's most likely a trading range. And so they can scale in lower and probably still make money. Now, I would not advise, buying the close of 16 and scaling it all the way lower, but it's not an unreasonable strategy because it shouldn't be a bear trend day after 15 and 16. So 37, I gave it 90% grading on at least 10 plus 2. I think that, I'm looking through my data and you tend to get maybe 1 to 2 90%ers a week. And those are the ones where you trade a little larger. The other 90% one that I got was it the other day. I thought this was 90%. I believe I gave it 90% or 85. I know that I gave this one 90%, 48, 49, 50. So I was willing to scale in all the way down here. And when you get the 90% ones, they tend to control the next couple of hours. The really, really strong breakouts tend to control a couple of hours, as you can see. So usually they don't pull back too much. I don't have too many examples where they get really deep pullbacks. It obviously can get a deep pullback, but usually stuff that's this strong tends to control a couple hours of trading. So I bought the close of 37. I probably could have bought a little larger, and then I bought more on the close of 38, thinking that we would probably just go straight up to the 16 high since the trade was so strong. So and I didn't want to get trapped into a small position. And traders, you could argue it's parabolic wedge, 1 pullback, 2 pullback, 3, but it's a parabolic wedge on a lower time frame. And yes, 42 is a big bar that might get a second leg, but ultimately we're definitely going higher. The bar 16 high, you can see the bulls who got all the way up to the close of the bar 16 high and scaled in lower were then able to make money. It touched their exact entry price on bar 42, and then it sold off. So that's what caused such a big bar on 42. Traders know they're getting a discount. They're willing to buy the close of 42. It is a trading range, and then we could go lower. 42 might get a second leg, but that this is going to get a second leg. The odds that we just sell straight off and just trap traders who bought these closes is very low. 43, a big bull bar closing near its high. It's a big bar, big risk, and 42 might still need a second leg. So it's not really great to buy above 43, but it's probably not wrong. 40, some traders prefer to buy a pullback on 45, 44, 45. You can see the bull is struggling to get much higher considering the fact that 42 might still need a second leg. So it's probably not going to go straight up. So you're going to have to sit through this stuff. And it's tough to sit through a reversal like 47 when your risk is relatively large and it didn't go straight up. So that's what can make this trade difficult. Disappointing follow through on 48. The bears buy back shorts, another rally to 50. You could buy the close of 50 or 51. I chose not to. I just personally thought that we had 3 or 4 legs up, and so I decided to wait. I did make a mistake. Well, I bought this close. And buying closes late in a trend, never a good idea, especially the strongest looking thing late in a trend, and I knew that going into it, and I just got out over here. I gave it 2 or 3 bars, and the follow through was not very good, so I just exited. If you're going to take a trade like that, it probably makes more sense to hope that you get really, really good follow through for the next bar or 2. And had I used the normal wide stop that I used, it did not get run. Got close, but it didn't get run. But I considered I was going to try and just exit there and buy again at the 57 low and then buy more and try to get out up here. But it started to get like late in the day, 71, 72. So I just left it alone. But had we gotten, I thought 1 leg down, pull back, 2 legs down, pull back, 3 legs down. So the bears have 3 legs down. They've done what they were trying to do. And the bulls should get something. They got leg 1 on 68. 68 is going to get a second leg. Traders buy more. And then 70 is the second leg for 68. But these bulls still probably need a second leg. So we get 3 more legs down, 1, 2, 3 consecutive wedges. And traders are buying more below the 57 low. Or they'll buy above 75. Basically taking a chance that we race up, which we did. As far as trades on the day that you could take, like I said, 6 is probably fine. Maybe 9 or 10. Hard to sell closes down here for the reasons I mentioned. I don't know if I would buy above 15. Maybe it's probably okay for at least a scalp. But if you bought above 15 and you got stopped out, you probably aren't properly equipped to trade bars like 15. 22, 23, you can sell closes. 35, 36, you can buy the close. You can buy the close 37. You can buy any of these closes. You can buy this close. You can buy that close. I probably would not buy 47 close, but you could buy the 48 close, the 49 close for sure. 50, you can buy any of these closes. And if you bought the close up here and you scaled in, you would have made money. 3 legs down, and you could buy above 75. I ended up with a small profit on the day. So you can see we have 3 legs down. It's a tight channel, so it's going to get a second leg. The first reversal up should fail, but it's still a reversal for the bulls. So if the bulls happen to get really, really good follow through on Monday, then increased chance that it's a leg one and that will get a second leg. But it's really going to be dependent on what Monday looks like, and pay attention to what happens when we trigger that high. The weekly chart, the bears had a decently strong close. We have tails on these bars, so not as good as it could be. Still think at least 75% chance that we get a second leg from this. So even if we get a pullback, we should come back and retest this low. So any rally should be looked at as minor over the course of the next couple of weeks. Maybe we could pull back to 6,000. We could even pull back towards the high, but this should get a second leg down. I don't really need to go over the monthly chart just yet. So that's going to be it for this video.